Hey everyone, welcome to the Final Bar. I'm Dave Keller, Chief Market Strategist at Stockcharts.com. Obviously not in Redmond, Washington today. We're actually coming to you from the coast of Washington, southwest corner of the state, the border between Washington and Oregon, the mouth of the Columbia River. The charts still work fine, so I'm excited to bring to you some of the charts that I'm finding in my review of the daily price action today. So before we do anything else, let's get to the charts. All right, before we get going with the market recap, I do want to mention a poll we had going recently on our social media accounts. So make sure you follow us on all the socials and anywhere you see Stock Charts or Stock Charts TV. We asked you recently, where will Bitcoin be on April 30th, 2024? So you got about 3 weeks left to hit that point. And what do we think? You know, it's interesting. 37% said below 60K, which I'm actually a little bit surprised at, given the rally that we've had in Bitcoin. It's currently sitting just above 71K, if I remember right. We'll look at the chart here in a second, but look at the spread between all of these answers. 20% saying above 80,000, 21% between 70 and 80, 23% between 60 and 70. Which means 60% of us say basically below current levels at the end of this month. Let's take a look at the chart of Bitcoin here and see how things are playing out. Actually, had a pretty decent weekend, and Monday's session sort of pushing to the upside, which is pretty cool to see. Here we go, Bitcoin. So if you look at this, when we talked last week about what we call a coil pattern, or you might call it a pennant pattern. It depends on what time frame you're looking at, but looking at the last 2 years certainly feels like a coil pattern, a consolidation pattern, or a symmetrical triangle, and that's when you have lower highs and higher lows. General way you play this sort of pattern is basically you have a trend leading into the consolidation pattern, into the coil, and then which was clearly higher, right? And then we have this coil of lower highs and higher lows. So we're sort of rotating around that 68,000 level, which would kind of be right at the midpoint of that pattern. Now, at some point, usually John Murphy would say 2/3 to 3/4 of the way through the natural end of that pattern, you break either above the upper threshold or below the lower threshold. And as you can see here, certainly looks like today we're resolving that pattern to the upside, in which case I would argue there's a lot further upside to be had. I'm probably more bullish in Bitcoin than I think the respondents in the poll. I think in the back of my mind, besides the technical implications of this coil pattern, which appear to be resolving to the upside, I think it's also the fact that we have the Bitcoin halving here coming later in the month of April. And when that happens, 100% of the time in the history of Bitcoin, it's ended up being pretty bullish for cryptocurrencies and particularly for Bitcoin. We'll hope to bring on my friend Adrian Zadunchik here soon to give us a take on the Bitcoin halving and what that means for Bitcoin and other cryptocurrencies. Let's keep going here with our market recap. You can see it was sort of a, much ado about nothing looking at the price action today. You can see the S&P, the Dow, the NASDAQ all finishing, within 0.1% of where we finished the week on Friday. So not really much change across the board here. So the S&P holding steady just above 5,200. The Dow right around, just call it just below 38,900. The NASDAQ composite again flat as well. Mid caps and small caps both outperforming. So note that while the S&P and the NASDAQ were flat today, S&P 400 mid-cap index closing just above 3,000. That's up 0.4% from Friday. The S&P 600 small-cap index up 0.6%, about 2/3% to 1317. The VIX actually coming down here a little bit, but remaining above 15. We made a little bit of noise at the end of last week about the VIX pushing above that 15 level. I actually finished Friday above 16. I recorded a video on my own YouTube channel called Market Misbehavior. I'd encourage you to check that out from Friday. We talked about the VIX pushing above 15, what that means, and highlighted some of the other levels, which I think are even more ominous, and they're above current levels. For now, the VIX, I think, generally safe, but above 15 for me means pullback mode, and that's sort of what I'm anticipating. Came off a bit, as I mentioned today. Looking at interest rates, you can see for the most part, rates going higher today. The 10-year yield around 4.38, long bond yield higher around 4.53. The short end, of course, still remaining pretty high. We have our next Fed meeting here coming up, and I would say the market is essentially pricing in the first rate cut at the June meeting. I haven't checked on the FedWatch site here in the last week or so to see if there's been any real change, but I wouldn't assume that given the movements we've seen in other charts along the way here. Dollar index, again, not much change. So bonds, stocks, the dollar, really kind of a muted day overall here. Perfect, by the way, for a spring break retreat. We could keep the market just being kind of sideways and choppy until I can get back to Redmond, Washington on Thursday afternoon. That'd be fabulous. Gold and silver pushing higher, though. Had some great conversations recently about the price of silver. I think it was Joe Rabel and I talked a lot about silver prices in particular, in both silver and gold going higher. Gold and gold stocks certainly seem like a pretty compelling bet here, given the fact that gold is at or near new all-time highs. Silver prices, copper prices have all gone higher. We talked to Joe Rabel about some of the mining names. Freeport-McMoRan came up. We've highlighted some of the other gold stocks recently as well. Continue to see those as a decent opportunity. Actually, a rare down day for crude oil prices. Energy, we're at the bottom of the list today. We'll take a look at the sectors here in a moment. As I mentioned earlier on in the recap, cryptocurrencies really pulling back through the course of this weekend. Bitcoin on Sunday actually got down to 66,000 before rotating higher. And earlier in today's 24-hour session, we got above 72,500, settling in currently around 71,600, we'll call it. That's up about 3% from yesterday. Ether prices just below 3,700. You can see all 10 of the top 10 cryptos that we follow are all in the green today. Let's take a look at the 11 S&P sectors and see how things played out through the course of today's muted session. So while the market action overall was not particularly directionful, if that's actually not a word, I just made that up, but a lack of direction, a sideways trend is what we would say. Consumer discretionary, the XLY is your top performer, still below 1%. We'll call it just below 1% higher today. Number 2 and number 3, very defensive sectors, real estate and utilities, up 0.9 and 0.7% respectively. Now that's kind of an interesting thing to pay attention to. One of the things we talked about last week, and really in recent weeks, going back to my webcast that I did in March on a bull market top checklist. One of those items, I think number 4 out of 7, if I remember right, is an improvement in defensive sectors. That would be utilities, real estate, and consumer staples. Until those sectors really start to outperform and really improve on a relative basis, the market is telling you it's still offense over defense. No real concern to be had there. So the fact that real estate and utilities are toward the top of the leaderboard today definitely has me thinking a little bit. By the way, I talked with Julius DeKempener. I think that was last week when he was in our office in Redmond. Had him in studio talking about some defensive sectors. And again, similar read, looking for an improvement there as a sign of risk off. Not really seeing enough of it yet. But more days like today may make that more of a reality than we've seen so far. At the bottom of the list, you have energy down 0.6%, healthcare down 0.33%, industrials down 0.2%. Let's go all the way down to the Magnificent Seven and Friends. Again, I'm actively looking for a new name for this list. So Final Bar Nation, if you have any recommendations on what we should call a new group of leading growth names, Fab Four has been proposed. I think that's a little too timely. I think that's a little too much tied to March Madness, which is almost over. So I have to thumbs down that one. So let me know if you have a better idea. Four Horsemen is my current front runner, but that's a little more doomsday than I think we probably want. By the way, looking at the action today, you can see Tesla up 5%, Alphabet number 2 up 1.5%. The rest of these leading growth names were flat to down. And pay attention to the ones that are down the most today. Meta and Netflix, arguably two of the best performers of this group. They're both down 1 to 1.5%. Tesla's an interesting one. Just bringing up the chart here. Down 5%. And again, one day does not make a trend, right? I mean, trends are made of multiple days over time. So, what you have to remember is at any point, any chart can be going one of 3 directions. We're going up, we're going down, we're going sideways. And the way you answer that question is really dependent on your time frame, what time frames are interesting to you, are compelling to you, and how you're, what questions you're trying to answer, for lack of a better term. The chart of Tesla for me, when I'm generally looking a couple months down the road, is clearly in a bearish trend. Even though we've had a bounce here in the last couple sessions, overall, we're making a pattern of lower lows and lower highs. Now, in the last week, we have not made a lower low, and that might be an interesting data point to pay attention to. A couple things to think about here with Tesla. We're sort of settled into another sort of sideways choppy range here. I would say we're range bound between 160, which has now become clear support on the lower end. We'll call it 185 on the upper end. Note that the 50-day moving average is right around that same point. So that tells me Tesla above 185 is pretty compelling, because we've then made a bit of a double bottom and then broke into a new swing high. Tesla below 160, to the contrary, pretty negative, because that would mean another new low and just the latest in this consistent downtrend. Now, all of this, by the way, is happening below the last Fibonacci support line, which is generally speaking not particularly bullish. That's actually more bearish. The fact that we broke below there, tested it about a week and a half ago and trading lower, that's really less ideal than you want. And also the fact that the RSI has been largely below 50 for pretty much the entire year so far of 2024. So I think a chart like Tesla is guilty until proven innocent. We are finding support at 160. We're bouncing today. 5% is nothing to ignore. However, I would say keep your eyes on the larger trend, still more distributive than anything. Let's go to a daily chart of the S&P 500. Just think about what happened today and how that evolved the daily chart that we're looking at. You can see we're just toying with this level of what I call tactical support. 5,200 is a tactical level. And what that means for me is just, that's my quick vernacular of saying a short-term level, very short-term. And this is just one of those quick, like you jot it down on a piece of paper. I remember spending time earlier in my career in the pits in Chicago, places like the CME, the SIBO, and I distinctly remember at the Chicago Mercantile Exchange seeing traders that would go over to a Bloomberg terminal or some charting platform off the floor. They would bring up point and figure charts and market profile charts and things like that. They would jot down levels on an index card and then have them with them in the pit. And they would think of those key levels as pivot points. Those are levels that they wanted to trade around. Now, the days of floor trading are essentially behind us for the most part. The days of traders jotting levels down on an index card are behind us. But the value of a tactical support or resistance level, which is basically what they were jotting down, is what I'm getting at. During the day, you have that level that would just generally give you a sense of whether we're in a period of accumulation or distribution. What's the sentiment on the floor today, for lack of a better term? You can see that 5,200 has been a pivot point. What I mean by that is we've tested the level a number of times. We've found support and resistance there. We've actually revolved around that level quite a bit. And the last couple sessions have, actually the last 5 sessions have all touched this particular price level. So, we've had a lot of interesting days. On, I think, Thursday of last week, we had a bearish engulfing pattern. Friday, we had what's called a bullish harami pattern. Today, we have another inside day kind of aiming downward. So, if nothing else, the S&P giving a clear, I'm going sideways signal right around that level of tactical support. For me, the S&P below 5,200 tells me tactical pullback. S&P below 50.50, which would also get us below the 50-day moving average, would tell me more of a cyclical pullback, more of a dangerous sort of pullback that I want to pay attention to. Worth noting, by the way, I meant to show on the dashboard, we have a new widget on here, relatively new, called the Keller market model. This just applies the market trend model that I've used in my own service for a number of years, applying it into the Stockcharts platform, which is pretty cool. I'm excited to have this available for everyone. It basically applies a series of weekly exponential moving averages to systematically determine the trend on 3 different time frames. Generally speaking, short term is a couple days to a couple weeks, medium term is a couple months, long term is over a year. You can see that as of Friday's close, these small cap and NASDAQ 100 market trend models did indeed turn bearish on that short term. Now, while that's not an end of the world sign, let's not get too excited just yet. That's how things start, right? After a major market top, you'd usually see small caps, previous leadership names all start to rotate lower. Eventually, you'd see other things start to rotate down. So the bear scenario from here, for me, would be more red in the short-term column. The real negative scenario would be start to see medium-term models turn negative. Now, we'd have to have a little bit more distribution than we've seen so far. The major averages are still holding in pretty close to where they were, testing all-time highs in terms of the NASDAQ and the S&P. But keep an eye on this one as we start to see some initial signs of a distribution. Worth noting, by the way, in recent weeks, right, so far in 2024, we have had some times where those have turned briefly negative, but they really haven't stayed negative by any means. Just to finish off this brief final bar here for Monday, April 8th, I just want to show you some of the other charts that are top of mind as I'm reviewing the information today. The McClellan Oscillator, as of Friday's close, did go below zero, and actually was below zero earlier in the week, spent most of last week below zero. A lot of the breadth indicators that I look at, like the bullish percent indexes, like percent of stocks above moving averages, advanced decline lines. These are, generally speaking, a little more medium-term or long-term breadth indicators. They're really trying to not give you whipsaw sort of quick signals, but more thinking of larger rotations, from one side to the other. The McClellan Oscillator is basically an adaptation of that daily advanced decline data, but turning it into an oscillator. So it really is designed to be what I found in my favorite short-term breadth indicator. It is worth noting that about a week ago, the indicator did go below the zero line. I have it shaded here in red. That tells us we're in a period of distribution. Now, if you look to the left half of this chart, you can see why this has become one of my favorite short-term indicators, because most of the time when this indicator goes below zero, particularly in a bullish phase, those are your pullbacks. And so recognizing that the short-term breadth is negative often tells me, okay, hold on, we're probably going to get a lower low here pretty soon, or at least a new swing low that you can maybe capitalize on. Worth noting, though, so far in 2024, it has not been particularly helpful. Signals in January, right at the beginning of the year, signals in February, brief signal in mid-March, really didn't play out. You had, just the briefest of drawdowns, if you can even call it that, before the uptrend resumed. Now, when something like this stops working for a little bit, it doesn't tell me to throw it out and just ignore it. It just tells me that something's unique. I want to pay attention to the trends, keep using the tools that I'm familiar with, and continue to evaluate them over time. So worth noting now, once again, we're getting that distribution pattern. We're getting the McClellan Oscillator below zero. For now, I would keep an eye on this to see if we get a little bit of further distribution here. And again, given the trend that I'm seeing, given the weakness there, that tells me to pay attention. Last thing I want to finish off here, and then we'll wrap it for a shortened show here on Monday, April 8th, is looking at NVIDIA. One of my note to my subscribers at Market Misbehavior, called the Weekly Flight Plan, something I put out every weekend, and we talked about NVIDIA and other semiconductors. The basic, I think, playbook that I'm looking for, or signs that things are different, right? We've had a growth-dominated bull market phase in Q1. I would say toward the end of Q1, you started to see value sectors like energy and financials and industrials really start to participate. We're seeing more of that with materials and energy resuming uptrends and showing a lot of strength here so far, early days in Q2. What you would also look to see is if we get rotation away from growth. And I think we're starting to see that with names like Tesla and Apple. You're not necessarily seeing it yet in semiconductors. And semiconductors are a pretty important bellwether space. If semiconductors like NVIDIA and AMD and others are holding up, conditions are just not getting that bad, and there are plenty of growthy things working just fine if those stocks are holding up. It's worth noting that just while Tesla is not making a new low, NVIDIA is no longer making a new high. Actually made a new all-time high here, just below 1,000 early March. We retested that level, really didn't get much above 950, and now we're again rotating to the lower end of the range. So it's not really breaking down yet, but it's certainly not going up anymore. And behind the scenes, right underneath the hood, you're seeing those patterns of distribution, lower peaks in the RSI, which tells me waning momentum. So overall, as I think about the semiconductor space, I'm concerned about the lack of upside thrust, right? These are not going down. I'm not concerned by significant drawdowns, but I'm keeping an eye to see if we do get a rotation to the downside. Folks, we need to wrap the show and go right to the 3 in 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1, the McClellan Oscillator indeed finishing last week below zero, continuing to remain below the zero line. And again, breadth indicators like this gave some signals earlier this year that did not particularly play out well. However, you're seeing a lot more distribution. I think one of the things you didn't see as much in earlier in the year were some of the growth names really struggling, right? All of those names were doing quite well. Now you're seeing a lot more of a differentiation between the things that had been working and a lot of them no longer working. So I think in this case, the breadth going below zero using the McClellan Oscillator could be a bit of a sign for additional concern. I would keep a wary eye on that one and see if we get some downside validation. Chart number 2 is the semiconductor space. The SMH is what we're looking at here. As a reminder, we looked at NVIDIA in our market recap. And, while semiconductors are not particularly going down, they certainly don't seem to be going up anymore. And the SMH is actually making a bit of a coil pattern as well. We saw that with Bitcoin resolving to the upside here in the last 24 hours. I don't know if semiconductors are going to resolve to the upside or not. What I would tell you is there are a lot of things going for this chart. I would think of this chart as innocent until proven guilty because, again, overall, we keep making higher lows. The RSI has not been below 50 except for this brief drop in January. Other than that, it's going back to the October low. The last time the momentum could be described as anything but pretty bullish. So I would say keep an eye on that one as well to see if we do get that any sort of breakdown. For now, it certainly seems to me like the SMH is holding up okay. And sorry, I didn't have the last chart queued up for you. So let's go with energy. When I'm thinking of sectors that are starting to work, when I'm looking for opportunities, I look where there are charts starting to break out. And when you're looking at something like energy, first off, I would always do the unadjusted chart, which means underscore XLE is the way you look at this. And if you look, this is a pretty significant base that we've ended up with. If you look, that 93 level on the XLE served as resistance the first time in June of 22. Then look at how many times we retested it, which means this final breakout is really powerful. The weekly chart really shows the magnitude of that breakout more than anything. But I would say worth noting that the XLE was overbought on the weekly chart. Now coming out of that overbought region, still overbought on the daily chart. I would look to see if and when, it's probably more when than if we come out of that overbought region. That might be the tactical pullback. And if you think long-term bullish on a chart like energy, you're looking for that pullback. It's sort of a buyable dip, right? An opportunity to layer in. Maybe that's the signal you might be looking for. Make sure you use tools like the RSI to measure momentum, things like the chandelier exit to make sure you don't leave too much on the table if things really get negative. But overall, I would say that's where we're at here. Hey everyone, that's a wrap for the Final Bar. Thanks so much for joining us every weekday after the close for our show. Special thank you today to our cameraman Henry Keller behind the lens here in the back. For Stockcharts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.